Hey there, folks. Camari Ellis here from another edition of Ask Camari. Been away for a minute because I've been working on another project called I Love Investments. It's something I wanted to launch under the new banner, new branding, and everything. And that's why I've been kind of away doing the video audio thing, or haven't been doing the video and audio thing as much as I would like to, or as much as I get questions about investments. But I haven't forgotten about you. And today I wanted to rattle off a couple of them, just put them all in here. I got about three today. I put a call out and asked if anybody had any questions, and I got about three so far. First one comes from Kwame B. True Washington. Asked me about he wants some penny stocks to practice on. Any suggestions? Man, one of my very first videos was on penny stocks, and it seems like folks keep asking me about penny stocks. Well, here it is. Penny stocks are the spawns of the devil. That's right. Penny stocks are the spawns of the devil. I hate penny stocks. I hate penny stocks for beginning investors. Now, if you have experience, you understand the markets, it's great for you to go into. If it's brand new for you, I wouldn't bother with it. It's a waste of money. Now, if you can afford to lose money, then that's great. Just to give you a quick story, a couple years ago, 50 Cent bought about 30,000 shares of a company called H&H Imports. Tweeted about it, made the stock price go up, and he made about $8 million bucks. And then a week later, he sold and he was out. He was gone. You can read about it. There's some stories about it floating around a couple years ago. But penny stocks are easily manipulated because they don't have a lot of volume. What I mean by volume is they don't have a bunch of people buying and selling on a daily basis. So anytime you have somebody coming in and they see you buying, 5 shares, 15 shares, 20 shares, even 100 shares, they think it's some extra activity. They go to buy it. Price jumps up and it gets really, really crazy. But it doesn't last. So, it may jump 20, 30 cents today and it may fall 40 cents tomorrow. Now, for the record, a penny stock is any stock that's below $5. Now, you will see stocks that are 5 cents, but you will also see stocks that are $4. Now, I don't want to confuse folks because a couple years ago, Bank of America, which is an S&P 500 company, was a penny stock for a hot minute. Now, if you see something like that, that's a different story because it wasn't there. It was a stable business. It was set up and it was running, had a good operation. But, your typical, brand new company that just came out, I would stay away from it. I wouldn't invest your money with it. So, stay away from the penny stocks, Kwame. Let me know if you have any other questions. Another question from Angela Johnson. She asked, do I know of anybody buying annuities and what the maximum month payout? Well, my company actually, we sell annuities for the right investors. Basically what an annuity is, it's a life insurance contract. You put your money into it. There's a couple of different versions of it, but you put your money into it and it usually gives you a secured fixed rate, or they give you a variable rate. Now, the fixed rate is money that's made from the insurance company. It's an interest rate. If it's a variable rate, the money is then invested in the stock market. They can be a little bit pricey. They're not for everybody. Be careful when you go to buy them because they all have what's called surrender periods. Basically, if you put $10,000 in today, you will not be able to get that $10,000 out immediately. It may take anywhere from 5, 7, 10. I've even seen 15 and 20 years before you're able to get that out. Now, there are some other cool things about annuities, like some tax advantages and things like that. But talk to your financial advisor or insurance person to help you with that. If you need me to help you with it, just give me a call and I'll walk you through the whole process. Last question comes from Rich Lassiter. He asked, are VUL policies a good way to hide capital gains? Well, first of all, can't hide capital gains. Big Brother, Uncle Sam, the IRS, news, everything. I hope everybody's getting their taxes done. April 15th is upon us. It's coming really, really fast, so make sure you get all your paperwork together. But to answer Rich's question, you can't hide it, but it is a good way to shelter it. And what that means is you can invest money in a stock market. It can grow, and you don't have to pay any tax on it. Actually, these policies are very, very tax advantage. Now, what does VUL stand for? Variable Universal Life Policy. Again, Variable Universal Life Policy. And basically, it's just a fancy life insurance contract that allows you to not only have a death benefit when you die that you can pass along to your family or your loved ones, but it also allows you to accumulate a cash value because you're going to invest part of the money for your premiums into the overall market, the stock market, that is. So you know, part of it, let's say 50% goes to your death benefit, and then another 50% goes to the stock market and an investment. Now, what they allow you to do is pick from a menu of funds, usually mutual funds. They actually call them sub accounts, and inside those funds, you can pick, you know, biotech, pharma, S&P 500, bonds, things like that. You have to be very careful about how you pick your investments inside of variable universal life policies, because those policies can blow up on you. You have to be very, very careful. A lot of times I see folks out there selling those policies to anybody with a pulse and that's breathing, and that is actually a mistake. They are not meant for everybody. They're really meant for people who earn high incomes typically, and that can overfund them. And don't want to get too technical, but basically you can pay money into it over and above the cost of the insurance cost, or over the cost to pay out the death benefit to you. So actually, I wrote a whole guide about life insurance because a lot of people don't understand it. I'll include the link in here. It's called The Ultimate Consumer's Guide to Life Insurance. It talks about various types of life insurance. You have term, you have universal life, you have whole life, and you have variable universal life. Now, going back to Rich's question, VUL is also a permanent policy, so it'll last the duration of your life. Like you said, the money will grow. It'll grow tax-free. There's actually ways to pull the money out tax-free as well. You can do a lot of creative and wonderful things with that. A lot of people think I am anti-insurance. I am not anti-insurance. I'm actually very, very pro-insurance, but I am pro-insurance for what works for the particular individual organization. It's no need in buying some high, expensive insurance policy that all you're going to do is lapse. That's just a waste of money. It would be better to buy what your pocketbook or what your wallet can support. So just remember that when you talk these over with your life insurance person or your financial planner. For more information about VULs, you can contact me, or you can contact your financial planner or life insurance person. But remember, if it's tight to pay for it, don't do it. Don't do it. I've seen it happen, and these policies will blow up on folks, and it just doesn't work out. It becomes a waste of money. Until the next time, this is Ask Camari. Like I said, I've been kind of holding back and not doing a whole bunch of video and audio stuff because I've been waiting to get my new site rolling, my new platform, my new project called I Love Investments, working with a buddy of mine named Nasir Jones, who's a wonderful, wonderful website developer. And things have just been going a little bit slower than what I anticipated, but it's coming soon. Going to be rolling out a bunch of new stuff, having a bunch of fun. And so I'll be here for as long as I can. But if you have any questions about investments, feel free to ask Camari. Until the next time, stay safe. Bye-bye.